Hi, I'm Tyler Laundon, Chief Analyst of Cabot Small Cap Confidential and Cabot Early Opportunities, and I'm here with your Cabot Weekly Review. It is Friday, October 20th, and we're coming up right at about 10 o'clock a.m. Eastern Time. So as you can see, chart here of the S&P 500, not the best week for the market. In terms of what I want to talk about today, obviously there's so much going on, overseas, here in Washington, it's earnings season. We have interest rates going up, but I think that it could take, I could take an hour talking about any one of those things. What I'm going to do is just zero in on three stocks that I think are interesting right now. That way we can kind of keep things manageable today and not get too sidetracked going down the rabbit hole on any one of these other, number of big things. Before we do that, just real quick, obviously the market is down here a little bit today and down for the week, but the big picture story is told here with this chart. This is the yield on the 10-year note, which, for all intents and purposes, hit 5% yesterday. And, that's the big story. That's what Powell was talking about. That's what the Fed has been out kind of talking a little bit about lately. And I think the bottom line is that we need to see yields pause in order for the market to be able to do anything good. For those of us that would like to see the market go up. If 10-year yield goes above 5%, there's a lot of commentary out there about how that could kind of shake a few things loose. So hopefully that doesn't happen. Again, that's the big picture stuff. Rather than spend all morning, all day talking about that, let's just jump into some stocks, because there is this group of software stocks that I think is pretty interesting. So we're going to talk about three of them today. And in this area of software, of technology, these guys still look relatively good. There's been some M&A in the space lately. Software continues to be like an efficiency story, AI, automation, all that. The three that we're going to talk about here today, starting with GitLab. Expectations have been trending higher lately. And all three of these companies are either profitable now or are soon to be profitable. So these are three companies that are pretty close to the top of my list for the upcoming weeks and months. So again, GitLab, we'll start with that. So I think I've talked about GitLab before, and I think Mike Santolo has as well. So it's a source code management platform company. They have a whole bunch of collaboration, sharing, and tracking tools used by software developers. Kind of the big picture story on Wall Street is that increasingly analysts have become more confident that GitLab can gain some share in the DevOps market. Of course, GitHub was acquired by Microsoft some time ago, so GitLab is kind of still out there as an independent. The platform already has a whole bunch of AI capabilities, and there are a lot more in beta mode, including some proprietary tools that are using Google Vertex AI. And really, the big picture story behind all this is GitLab's strategy of protecting code and providing privacy tools as well. Like I said, over the last 3 months, growth estimates have trended higher, while the stock, as you can see here, has kind of been, I wouldn't say languishing so much, but it hasn't really done a whole heck of a lot. Between 41 and 54 is kind of the bounds here. And right here we can see GitLab trading around both its 25 and 50-day moving average lines. Those are the green and the red lines. The third quarter doesn't close until the end of October. The fiscal year ends in January. So third quarter results aren't going to be out until December, so this isn't a company that's going to report next week or the week after. Have a little bit of time to think about it. Back in July, it looked like GitLab was going to grow revenue in the current fiscal year by about 28%. Like I said, estimates have been going up. So consensus now is calling for revenue growth of about 31.5% this year. That would be to about 558 million. And then earnings per share of negative 6 cents. That has gone up significantly over the last 3 months, a 9-cent improvement in earnings. So again, the trend here in the fundamentals is looking better and better, at least as far as analysts are concerned. Embedded in those estimates is an assumption that in the third quarter of fiscal 2024, revenue grows by about 25.5%, and EPS should be right around break even. I looked at the forward numbers for fiscal 2025, which again will begin in February, and analysts are looking for revenue growth of around 30%. So, like there's no material deceleration in revenue expected out of GitLab. I think when we couple that with the improved EPS trends, it gets to be a pretty interesting story, especially when you marry that up with kind of the place that it's playing in. So anyway, that's GitLab. Let's move on to Dynatrace. So ticker symbol here is DT. Dynatrace is another software company, and it has solutions that help a lot of departments within large enterprises monitor their IT environment. So it's, infrastructure, applications. There's an automation and artificial intelligence story here as well. Back in August, when the company reported, you can see here, there was a bit of a dip in the stock. Well, more than a dip, significant pullback. It was 13.3% on that day. So management was pretty conservative, just talking about, what was going on. Numbers weren't as good as the market was hoping for, but they did talk about a lot of new interest in companies that wanted to switch from providers that they were using. So the pipeline was filling up pretty nicely. A lot of new companies, like I said, 15% new logo growth is what management was talking about. Also, management was talking about their new AI solution, which they're calling Davis Copilot, which is expected to help engage more clients and improve their return on investment when they pay for Dynatrace software. The company also acquired another company called Rookout, which has a troubleshooting tool for some cloud-native applications. So anyway, since then, I've been reading more and more about Dynatrace, a lot of analyst notes, just talking about customers that are moving to Dynatrace to handle some more of their workloads. Part of that is because of aggressive price hikes from Dynatrace competitors. There's also been some M&A in the space, so perhaps some clients are saying, well, we'd like to go with Dynatrace rather than, or at least move some of our workloads over to Dynatrace rather than stick with the company going through a major transition. It's not like we're seeing that the floodgates are open and Dynatrace's growth rate is just going to go through the roof, but there's definitely seems to be a lot going on in the market, both in terms of customers evaluating their options, and then also, like I said, there's been some M&A. In terms of what is expected out of Dynatrace in the upcoming quarter, and I should note that the earnings date is on November 2nd, so the week after next. So analysts see Dynatrace growing revenue by almost 22% this year. That would be $1.4 billion. And then by about 19% in fiscal 2025. So again, like 22%, 19%. It's not like, a big drop off, pretty consistent growth seen for the next couple of years. And then earnings per share should be up about 8% to $1.05 this year. Pretty profitable company. When earnings come out on November 2nd, in terms of the numbers that we're looking for, revenue should be up 23.4% to $344.6 million, and then earnings per share should be up around 21% to 27 cents. All right, so that is Dynatrace. Last but not least is Elastic. Ticker symbol here is ESTC. Of course, another software company. We're sticking in that lane today. So in terms of what they do, so Elastic is a search company. They developed a software as a service solution for enterprise search. If you want to get into the weeds of that, it's logging, security, observability, monitoring, and some analytics use cases. A number of analysts have talked about how Elastic is kind of like Google for large companies, and I think that's a pretty good description. Like at a really, really high level, users turn on and use Elastic to do things really quickly, accurately, and securely when they're trying to find things within their organization. Interest has definitely increased in the company since the first quarter fiscal 2024 report on September 1st. You can see that here. The stock jumped, what's the number here? 20% the following day. At the time, management talked about an increase in customer activity around its Elasticsearch Relevance Engine, which ESRE is the abbreviation there. And that is a platform for building generative AI applications and vector search capabilities. I'm not going to get into the details of what that means, but certainly look it up if you're interested. It's a new solution, of course. The company is already reporting, though, that it has hundreds of paying customers, so pretty good traction for a new solution. And it is also seeing more customers consolidate and move workloads to Elastic as companies kind of try to manage their IT spend a little bit more carefully. In terms of the numbers, so in the current fiscal year, so fiscal 2024, which ends in April of 2024, revenue is expected to be up 17% to 1.25 million. There's a big earnings story here. So EPS last year was 25 cents per share. It's expected to be $1.08 per share this year, so pretty significant. And I think the general sense I get when reading analyst notes about this is that they're being pretty conservative about this ESRE potential, but it could definitely move the needle pretty significantly. So I think that's why we see the shares here have kind of come up after that earnings report, and they've really held on pretty well. It's like one of these stocks that if a few things can fall into place, it could definitely do well. On the other hand, you know, if ESRE potential falls a little bit short of expectations or management is too conservative, then we could see it go the other way. So anyway, that is all that I have for today. 3 stocks. I think they're all interesting. Coming up first is going to be Dynatrace in a couple of weeks, and then Elastic and GitLab are going to be a little bit later in the earnings season. So that's it for today. I hope you have a nice weekend, and we will be back in touch soon. Take care.